So Hargreaves Lansdown is the biggest investment platform here in the UK, and apparently there's 1.6 million people who use the platform, including me. It's a pretty advanced platform and there are a ton of options and things you can invest in, which makes it great for advanced investors, but then also as a beginner, it can make things a little bit tricky, especially when you're starting out and trying to figure out how everything works. So I thought as part of my video series on Hargreaves Lansdown, I'd finally do a video with my top tips and tricks, especially aimed at helping you save a lot of money on the platform as those fees and charges add up over the years and making sure you fully understand what you're getting yourself into. Which means, touch wood, that actually you can reach your financial goals quicker and ultimately make a lot more money in the process. From my perspective, I've been a customer for over 6 years, so I've got a stocks and shares ISA there, I've got a self-invested pension plan as well as my general fund and share account. I have done and sold and bought and probably made every single mistake you could possibly imagine on the book, and I hold the majority of my investments on this platform. So I do have my skin in the game on this perspective. I'm not being paid at all to make this video, so I do hope genuinely that I can help a few people out there. And let me know in the comment section below, certainly fill your boots with any additional tips and tricks that you can share amongst the community, and we can all help each other out. Anyway, without further ado, let's get straight into the first one. Okay, this one's an absolutely massive tip, and I've probably not even made this one clear enough in some of my other videos. So Hargreaves Lansdown charge either very little or zero for holding shares and ETFs versus when you hold funds in the different investment accounts that they offer. So the best way to explain this is probably through an example. So I'll put this on the screen now. So let's say we were invested in a fund. Let's say we're invested in an index fund which tracks the S&P 500. One of these is just going to be a traditional mutual fund, and the other is going to be an ETF, so an exchange traded fund that also holds the same company. So these funds are going to perform exactly the same. So the way Hargreaves Lansdown charge you for holding these investments is that the fund itself is going to cost you 0.45% for the first £250,000 that you've got invested. So this does add up, and this can certainly add up in terms of fees, whereas the ETF will either be free in a general fund and share account or 0.45% cost up to a maximum of £45 a year when it's held in either the stocks and shares ISA or your self-invested pension plan. So as you can see, once you reach that market cap of £45 a year, anything after that is completely free to hold. So this pretty much means that anything above, say, around £10,000, it becomes more cost effective to hold your investments in either individual shares or ETFs, especially if you can find an ETF of a fund which you might want to invest in. Now, I know that's not always possible, but it certainly is for low-cost index funds which track the main markets around the world. The only additional fees you'll have to worry about are, of course, that £11.95 dealing fee, which doesn't come into play when you're trading funds, and then also stamp duty, of course. That's just a legal requirement if you are trading UK individual stocks and shares. Finally, let's just run another quick example. I'll put this on the page now. Let's say we've got £20,000 invested. A 0.45% fee on that, if it's held as a fund, would be £90 a year, so £7.50 a month. So it does add up for sure, but nothing in life is free. Trading is not free at all. So that would work out to be £90 per year, so £7.50 a month. So it certainly could add up, and you want to keep an eye on these things, of course. But secondly, if we were to hold that fund as an ETF, if there was an ETF version available, that 0.45% is still a fee to us, but it's capped up to a maximum of £45 a year. So of course we divide the £45 a year and we're left with £3.75 a month, which of course it just sounds like very small numbers. But again, these things add up over the months and over the years, and you end up saving a huge amount of money, especially as your portfolio grows beyond that £20,000 mark, for example. Once it gets into maybe the six-figure range as you're ending your retirement, these can add up significantly. I hope I've done a good job explaining that one, but that one is super important. It's actually reminded me on my own platform and some of my own investments that I might move them around to save my fees. But go back on this section if you couldn't keep up. Hopefully I've done a good enough job of explaining everything. This second one's really interesting, and it's all about how you want to reinvest, whether that be back into different funds or reinvesting back into individual stocks and shares. So this one's really, really important, especially if you're going to get paid any kind of income from your Hargreaves Lansdown account and you don't actually want that income. Maybe you're someone like myself in your 30s or 40s or 50s and you're still trying to accumulate wealth, so you don't really care about that money and you want to invest it back into whatever you've got in your investment platform. So again, everything depends on whether you're holding a fund, an ETF or an individual share. However, I'll put this on the screen now. You've got funds are of course a zero cost, so you can get that income reinvested, which is quite nice once that gets over to the value of £10. Then shares and ETFs, their cost is 1% of the trade up to a maximum of £10, with £1 being the minimum. So again, the best way to explain this is to use an example. So again, I'll put this one on screen now, so hopefully you can follow along. Let's say we've just received £50 as a dividend payment from an individual share. Now, we want to choose to reinvest that automatically. So our charge will be £1 because 1% of £50 is actually 50p. So it will round up to the pound. And then the only other cost we'll have to worry about is stamp duty. But essentially what we've done there is we've saved ourselves the £11.95 charge, which you'd normally get charged for trading individual shares. Now you'll find all the reinvestment settings. They're on your account settings page under your main account. So look out for those. And if you want a more detailed view of that, please check out my other video, which I'll leave in the description below, which is a complete user guide for Hargreaves Lansdown. So point number 3 is to really help you with point number 1. So as I mentioned before, if you can find an ETF, which is equivalent to an accumulation fund or a mutual fund that has the same things in it, you may actually be better off buying an ETF. Now, the next question will be, well, how am I going to find the right ETFs and what ETFs to buy? So Hargreaves Lansdown's got a really good section that you can actually go through and drill down each kind of ETF. And you can either search around geographic region, for example, or the certain fund manager. But it's probably not the easiest tool to use, in my opinion, and actually doesn't really give you much context. One of the things I would do is actually research externally. So websites like justetfs.com, I would go on that, potentially find an area of interest that you want to invest in. It might be a sector, it might be a geography, for example, and find the ETF which is going to be most relevant to you. It might have the lowest cost, it might be a big one, it might be one from a trusted brand and something you want to invest in that matches up to your goals. Then you can find that on Hargreaves Lansdown's website, and you might want to then buy that as part of a well-balanced portfolio. This one's really interesting, and certainly more interesting if you want to manage more of your own finances like I did personally. I've moved a lot of my personal pensions from previous workplaces over to Hargreaves Lansdown, mainly because I wanted to have it in a single place for me that I could then choose what investments that I have my money in, which of course I can't touch until I'm 55, probably going to be up to about 57 and maybe changing as we move on in the future. But I wanted to choose where my destiny lies and choose what I've got my money invested in. So just to give you some context, I've moved pensions over from companies like Scottish Widows and Aviva. It was super easy. And the way you do this is by going onto the website, go to the services section and choose transferring investments. You just fill out all of the information you need to do there, and you'll fill out what provider you're coming from and you kind of a reference number or your account number. Hargreaves Lansdown take care of the rest. You'll then get that money in your account as cash in your SIP account, and then you'll be able to actually choose what you want to have it invested in. So just to give you some context, I have my SIP pretty much completely invested in the majority of the S&P 500 and then a little bit in emerging markets. Really, really super simple in one place. No messing around with bonds and overweighting to the UK market, because some of the existing pension fund holders and pension managers, in my opinion, are rubbish. Next time you get that statement through the post, see where your pension is invested. And I know it looks like gobbledygook and the different rows and stuff and what percentages and what funds, but in my opinion, the default allocation is just poor. Probably going to get poor returns, and it's probably going to do a disservice to your money. Again, all in my opinion. Please make sure you do all of your own research. I wanted to have it all in one place so I could see it grow, and that's just the way I like it. Now this one's really good and especially important if you're a monthly investor, probably very similar to myself, that when you get paid, you want to try and put as much as you can into your investments. And you don't really come across 10 or 20 grand very often. It's all about trying to drip feed into the market. Actually, this is where Hargreaves Lansdown shine, in my opinion. So by investing monthly, you can actually save yourself a lot of fees, a lot of trading fees, especially if you were saving monthly into individual shares and ETFs. So funds are a separate matter. So we're not talking about funds in this section. So this is actually directly from their website. So you can invest monthly on Hargreaves Lansdown on any FTSE 350 company. So the name 350 just means the FTSE 100 and the 250 combined. So pretty much any UK company you can invest in here. This one's really good, for example, if you were a dividend investor and you just want to keep reinvesting. So let's run through this example. Let's say that you wanted to do £150 a month. We're saying here that the share price is £23. There's the dealing fee, which is only going to be £1.50. So that's the key lesson here. So we're actually avoiding the £11.95 trading fee here by setting up a monthly minimum payment into a certain investment. Stamp duty will always pay that. That's 0.5%. Number of shares purchased here would be 6 to get us to 138. The dealing fee and the stamp duty gives us £2.19 worth of fees. And then of course, we're actually left with a small amount of cash on the account, which on a separate note is always worth having just to make sure you can pay the rest of your fees. So this is a really good way to invest, and something I always forget to mention. For investing monthly with Hargreaves Lansdown, it's actually really cost effective and a great way to go about it. The minimum charge is £25. So for a vast majority of people, I think you can achieve this. And actually, if you know what you're doing and know what you want to invest in, it's a really cost effective way to do that. For the next point here, and one of the best things about Hargreaves Lansdown, in my opinion, is there is a huge amount of free information here, all of which you can help to do all of your own research in analysing and deciding what you actually want to invest in the first place. So for example, if I just go to GlaxoSmithKline here, I can go to the research tab. I can see what all the analysts are saying and see what they're saying about the industry and what's going on with the company. And anytime you have a big news article come out or a big change in one of your investments, you will actually get an email. So for example, I've always seen ones recently come through from the likes of Nvidia or GSK or any of those big companies. Any major company will normally have lots of analysts following it, so you can go onto any stock you like, see if they've got some research there, and read up to your heart's content. Oh, and there's a really interesting sector too called director deals. So anytime some of the major directors do any big buy or sell orders, and it's required by law that they have to report those, always worth looking out for. And on the whole, generally, if you're seeing lots of sell orders from directors, it tends to be a bad sign, whereas buy orders tends to be a good thing, either because they're confident and they know something that we shouldn't about how well the company's going to do, but typically it's seen as a good thing from the market. The day that a big director or a CEO or MD sells a lot of their investments is typically a bad thing. Hey, let's look out and see what Elon Musk does with all these Tesla shares that he said on Twitter that he needs to sell to pay for his future potential tax bill. Who knows? And finally, my tips and tricks is something, just a little bit of a tip here, just for being a customer. You do get your quarterly magazine. So I've just had mine through the post called The Investment Times. Again, there's lots of adverts in there, but there's also lots of good information too. So again, if you're trying to do your own research, I know it's really difficult. You need to have lots of multiple sources and try and understand what's going on, especially if you're going to be more of an active investor and investing in those individual stocks and shares, versus if you're going to be a broad market index fund investor, then you get to sleep well every night and don't have to worry about these kind of things. So in summary, look, I really hope that's helped everyone. I think the key takeaways here is that monthly investing is a cost-effective way to go. Holding stocks, shares, and individual ETFs is a way much more cost-effective than having the funds. The funds are exceptional in terms of the choice you have, but if you can find an ETF which is similar, especially a broad market index fund, then you will save a lot of money here because they are making a lot of their fees from those individual funds. And then of course, it's not really for frequent traders. If you are going to trade individual stocks and shares, because of that £11.95 trading fee, you really want to be buying in quite large amounts. I'd say it needs to be really quite in the thousands, even tens of thousands. If you're going to be investing hundreds of pounds, I would personally play around with some of the apps like Free Trade, for example, where you're not going to pay those fees. But if you are serious and long-term investing with quite a sizable pot, a platform like Hargreaves Lansdown could be really, really good for you. So anyway, there seems to be lots of incentives for those monthly investors and reinvesting, lots of good things there, but maybe not so good for a very small investments and very small pots. Anyway, I hope you've really found that useful. Genuinely, if you follow those steps, and actually it's reminded me that I do have a couple of funds which I probably need to save money on, because those fees will add up over the years and will probably save you thousands and thousands of pounds. If they do, you can buy me a drink down the pub next time you see me. But anyway, drop me a like if you found the video useful. It really helps out small channels like mine. Subscribe for many more videos. If you want more Hargreaves Lansdown content, please comment below and drop me a like again. Subscribe for more. I'll see you guys in the next one. And as always, happy investing.